What is your tax deadline? It really depends on who you are. If you are an individual, there is one deadline. If you are a corporation, there is a separate deadline. In this video, I'm going to go over all the different tax deadlines that we Canadians have and what are the payment deadline you have to pay all of this money to CRA so that you can avoid any interest or penalty. April 30th is the big day. For individual taxpayer, April 30th is the tax payment deadline, meaning that if you owe money to CRA, the payment has to be made by April 30th. If April 30th falls on a public holiday or a weekend, the following business day is the deadline. April 30th is also the tax preparation or tax filing deadline for most individuals. Now, why I said most? Because there are a number of people who are self-employed individual, and for them, the tax filing deadline is June 15th. So they get around 45 days more than a regular T4 employees. But even for self-employed individual, the payment has to be made by April 30th if the person owes any money to CRA. So the bottom line is, if you owe money to CRA, make sure to pay them by April 30th to avoid any interest or penalties. Now, what happens if somebody misses that April 30th? CRA will start charging you interest and penalties from the April 30th deadline. So imagine that somebody owes $10,000. CRA will automatically charge 5% on the outstanding balance. Let's say $10,000 was the amount that this individual owes to CRA. CRA right off the bat is going to charge 5% for paying late. So 5% of $10,000 is $500. Now what happens if the person delays the payment by 3 months? So for each delay month, CRA is going to charge 1% penalty for making late payment. So 1% of that $10,000 is $100. This person made payment 3 months after the deadline. So this individual will pay 5% penalty and 3% for 3 months of late payment. So total of 8%, which is $800 for that $10,000 tax payment. Now, what happens if he is a repeated offender? A repeated offender is somebody who has paid penalties in any of the last 3 years. If somebody paid interest and penalties in the last 3 years, CRA will consider that person as a repeated offender, and the penalties and interest for that repeated offender is actually double, meaning that the same example would have 10% initial penalty. So for a $10,000 tax payment, a 10% initial penalty is $1,000, and then 2% for each of these late payment month. So in our example, this individual made the payment 3 months after the deadline, 6% and the initial 10%. So 16% would be the total interest and penalty because this individual is a repeated offender. So sure to pay your payment before deadline so that CRA doesn't consider you a repeated offender. Now, at the beginning, I said something that self-employed individual has a different tax filing deadline. So even though they get 45 days more to prepare their tax return, their payment has to be made by April 30th. Otherwise, the penalty and interest starts calculating from April 30th. However, self-employed individual, commissioned person such as mortgage broker, real estate agent, all of these people have a little bit more time to prepare their tax return. If one of the spouses have business income, then the other spouse automatically also gets June 15th tax deadline. But again, in any case, the payment has to be made by April 30th. Now, what happens if somebody doesn't owe any money? In that case, the penalty is 0 because 0 times your 5% penalty is also 0. For those people who don't owe any money to CRA, it's not the end of the world if you miss the tax filing deadline of April 30th because penalty on 0% owing is also 0. So for them, it doesn't make any difference. The reason I raise this point because we see a lot of clients get very anxious to file their tax return by April 30th, even though they do not owe any money to CRA and they're in a desperate, dire situation to file their tax return by April 30th. Now, we don't encourage you to be a late filer. We always want you to prepare your tax return by April 30th, but please do not make it a life or death scenario. If you owe any money, just pay the estimated tax payment, pay a little bit more to CRA, and then file the tax return when you are in a position of filing the tax return. So if you are in an emergency situation where you cannot prepare the tax return by April 30th, just pay CRA an estimated tax amount, then prepare the tax return when you are able to. If you overpaid CRA, when you file your tax return, CRA will recalculate what you paid and what you owe, and then if you pay a little bit more, they will just refund you that overpayment that you made. So don't stress out, just pay estimated amount and call it a day. Now for corporation, the tax deadline is completely different. For corporation, it really depends on the fiscal year. So a fiscal year is basically the date when the corporation tracks their financial statements. For most businesses, it's January 1st to December 31st, but it doesn't have to be December 31st year end. It can be any other day of the calendar year. A lot of businesses may have October 31st as a year-end deadline. A lot of them has June 30th. So whatever the business cycle makes sense, a lot of time business owners also ask their accountant when the accountant is less busy. So they will choose that date and everything will fall under that fiscal year. Corporation, the tax filing deadline is 6 months after the year end. So if the year end is December 31st, June 30th will be the tax filing deadline. Now, if the corporation owe any money to CRA, then the payment deadline is 90 days from the fiscal year end. So in our example, December 31st was the year end. So the payment has to be made by March 31st, and the tax preparation, the T2 tax return preparation, has to be done by June 30th. If your fiscal year is different, you have to make the payment 90 days after the fiscal year end, and you have 6 months to prepare the tax return. Now, what happens if you are a partnership? If you are a partnership, the individual has to include that partnership income in their personal tax return. The individual will pay the tax on that partnership income as a regular individual, and April 30th is their tax payment deadline. The partnership has to prepare their own tax return by March 31st. Most partnership has a calendar year end. March 31st is the deadline to prepare the tax return. However, if all the partners corporation, then they get a little bit extension. But if you have a partnership, you probably are working with your accountant, and your accountant will be on top of all this deadline. Now, what happens if you have a trust? A trust, just like a corporation, may have different fiscal year compared to a calendar year. A lot of time we see that when somebody passes away, their trust has a deadline which is often not the calendar tax year. So for trust, it really depends on what kind of trust it is. If it is a mutual fund, then most mutual fund has a trust return by December 31st. And if that is the case, then the mutual fund has to report all of its income and everything by end of March, which is 90 days after the December 31st calendar year. For trust, the payment has to be on the same date as the tax preparation deadline, 90 days after the end of the fiscal year for the trust. Now, what if you are a business owner and has collected GST, HST for the government from your customer? Now, depending on your revenue, the date for those GST, HST payments, for example, if somebody is making less than $1.5 million of sales, the assigned reporting period is annual, and the payment has to be done at the same time as the return. So if somebody is making between $1.5 to $6 million, then CRA will ask them to prepare a quarterly statement and pay quarterly. If somebody is selling more than $6 million worth of goods and services, then the CRA wants them to prepare a monthly GST HST return and pay them on a monthly basis. So it really depends on what kind of business you are and how much volume you have in the business. Now let's take a look at some of the most common tax slips that most people get. So first of all, most of the Canadians are T4 employees. So anybody who works for a corporation gets a T4 as an employee. And the deadline for that reporting is end of February. If somebody has investment income, then you usually get a T5 slip. So a lot of bank issues if you have a savings account with them. That also has a end of February reporting deadline. If you have some sort of mutual fund with the bank, then you get a T3 slip, and for most of the mutual fund has December 31st year end, and that's why the T3 slips are given to you by end of March. So if you get all the tax slips by end of February, if you hold a mutual fund in a non-registered account, you might have to wait for a few more days and may have to wait until end of March to get your T3 slips. So even if you have all the other T4s, if you don't receive T3, you probably have to wait until April to prepare your tax return, because the T3 slips will be missing if you try to file your tax return by mid-February. So make sure to include all those tax slip. Otherwise, if you prepare a tax return without a slip and then CRA gets a copy of the slip by end of March, then you probably will not prepare the tax return properly. There will be underreport, and CRA may come back and charge you interest and penalty for those unpaid income. So make sure to always include all the slips. If you have security transaction on a non-registered account, then there is a T5008 slips that you get, and that also has a end of February reporting deadline. T4A, for example, CPP, old age security, all those slips are also due end of February, so you will get them from the Service of Canada. If you are a student and you have paid any Canadian universities and colleges for eligible program, then if educational institution will issue you a T2202 tuition certificate, and that is also due by end of February. Now let's take a look at what are the options to pay to CRA if you owe any money. The first and easiest option is to pay through your online banking. Most Canadians use online or mobile banking. All you have to do is search CRA from your bill payment option on your online banking or mobile banking, and then you will see the latest tax year's CRA account will show up. So for example, if you are paying taxes for the tax year of 2025, when you go to the bill payment section and you search for CRA, the CRA tax owing 2025 or whatever other year you are paying the tax, it will show up. You will select that option and then use your SIN number as an account. So the CRA will track all those payments by using your social insurance number, and then as soon as you add it and send the money from your bank account, that gets to your CRA account. They will double check the amount you owe and the amount you paid. If you overpaid, they will refund. If you underpaid, they will start charging interest and penalties. You can also pay by credit card. If you pay by credit card, there might be additional fee from the CRA side, because the credit card processing companies charges a fee and CRA doesn't want to accommodate that credit processing fees, so they will just pass that service charges credit card processing fee to you. So they will charge some extra fees if you try to pay by credit card. The other option is CRA My Account. You can set up a pre-authorized debit from your CRA online account, select your bank account, and give CRA the power to debit your account on a specific date. I think they will allow you 5 business days before the withdrawal date. So make sure to check out that option if you are planning to pay them from CRA My Account. The last option is if you are planning to pay them, you can also mail them a check or a draft, but it's not the best way to pay because a lot of time these mail goes missing or Canada Post didn't deliver them on time. There is also another in-person option, which is very popular among the seniors, is you can get those remittance voucher and go to your bank, and your bank teller will pay them directly from your bank account to the CRA's account. So these are a few options you can use to pay your tax owing to CRA. So whatever options make sense for you, choose the one, but make sure to pay before the tax deadline. I personally use online banking because that's the easiest and I can track the payments, but it really depends on your preference. So that's it. Thank you so much for watching this video. If you like this kind of video, Make sure to check out our social media accounts. And if you have any questions or if you have any requests to make any video on, please put that request in our comment section so we can make a video on that topic in the future. See you in the next video.